the railway budget, the first of the great policy documents that we are counting down to before the budget, and that was Suresh Prabhu, the railway minister. The big number out there has to be the operating ratio that the railways has put out at 88.5% from about 92.4%. This will mark a 9-year low as far as operational ratio is concerned. Why we are putting the limelight on this is because that in a sense exemplifies and kind of reiterates the crisis in the railways, the fact that it is cash strapped, the fact that it is huge, unwieldy, and the fact that there is a huge task ahead. We've got a packed house of analysts to dissect those numbers. The market's not very happy with the railway budget, clearly, because there was expectations about what big ticket changes the railway minister will come up with. There are a lot of granular details. There is the intention. There are 2-3 other documents that we will have to watch out for to see the kind of timeline that he has put forth. But we have our experts with us, Ramesh Chandak, Managing Director of KEC, Manish Agarwal, Executive Director Infrastructure at PwC, and Parvesh Minocha, Group Managing Director from Feedback Ventures, and Rajiv Jyoti, CEO railway business at L&T. I'm going to start with the experts over here, and of course Priyank and Abha have been sitting through all the pre-analysis or previews of the railway budget. From my point of view, a little disappointing because there is no roadmap to achieve that target of operating ratio. Manish, did you pick up something more?
No, absolutely, and I think one will need to obviously look at the details. I think there are several things that he mentioned are in the annexures, which he's not kind of read out. And I was picking up some of the numbers that were flashing here in terms of the amount of spend increase, and I did see something which said 17% increase in revenue. Now, I think that kind of an increase in revenue has not been seen in the past. I would expect the 88% achievement to significantly depend on cost control and not on revenue increase.
This time we took a break and started with the operating ratio, not the fact that there was no passenger fare hike, because that's normally what we start off with, right? Yeah. No passenger fare hike and no freight rate hike, which means that you've actually stopped the momentum, because last budget we actually saw the first passenger fare and rail freight hike in 10 years. So this means that there is a bit of populism over here, isn't there?
Absolutely. I think I don't think we were expecting hikes on either freight side or on passenger side for different reasons, and that comes back to the point that I think to achieve 88.5%, how costs will be controlled is going to be more critical than trying to get more revenue, because clearly the volumes are also not increasing to give that kind of an upswing to the revenue side.
Right, Parvesh, that's an interesting point, because we didn't really hear anything in terms of freight. I mean, he did talk about how they do need to tap into bringing in more customers back into the fold, that the railways are not utilizing their capacity and so forth. But again, no plan of action.
Yeah, I also agree. I think we're going to have to depend far more on the credibility, the personal credibility of the minister, that he'll do that. I honestly haven't seen a great roadmap either to improve the operating ratio or to achieve some of the other targets which he said. I did pick up some snippets somewhere else saying PPP cell is going to be revamped. They're going to be large-scale borrowing from multilats. They're going to be states which are going to get involved in joint ventures, and through SPVs, they're going to contribute to the rail development. So I'm sort of assuming that all these put together are going to result in the numbers which is flashing there. Yeah, one would have liked some big ticket announcement which I don't think we saw at all.
Yeah, that's exactly the point. You've got a whole host of schemes to announce. You've got a whole host of plans that have been laid out. But as Mr. Chandak was, while listening, also was pointing out, where's the money going to come from? And that still remains a little bit of a grey area, isn't it, Mr. Chandak?
He has really not spelled out. It's basically again depending, as he said, is upon the multilateral funding and PPP funding. He also referred about the load on the wagon to be increased. So that will bring in the more, because he said it will go to the 22.5 tons. Which is again a substantial increase, so that will definitely add to the freight revenue. He's also trying to say reduce the time, so maybe he can have more trains. But he has not introduced any, he has not announced new trains. Normally, which is the system in every railway budget, people almost announce 100, 150 trains. I think in this budget, there's no new announcement of the trains. Definitely, I think one thing that he understands what he's doing, because he has really studied that, and I hope that what he has said is able to achieve, because investment is almost higher by 46,000 crores.
Exactly.
He's moving investment from 65,000 crore to 111,000 crore. So it's a huge jump.
Yep.
84% jump in that.
Yeah, 84% jump. It's a huge jump, and the corresponding revenue, one is definitely that he's improving the operating ratio to 88.5%. So that will generate. But rest is all dependent upon PPP model and the multilateral funding actually.
Right. Let me bring in Mr. Uppal once again. Mr. Uppal, we were talking to you just before the speech as well, and you were emphasizing on the importance of private sector participation. Just, your first takeaways from the speech, because while he has gone big in terms of making the railways customer-centric, more safe, more hygienic and so forth, in terms of the actual layout, in terms of the plan, in terms of where the revenues are going to come from, we haven't yet seen too much detail.
Well, that is something that still remains to be answered. One is a little mystified that how is he going to get more revenues? He has increased the expenditure by 52%. But let me first say that I am relieved that he has not announced any freight increase, because that's the horse that they always flog. And of course, good news for passengers that he has not announced any increase there either. Sure. But I think there's a bit of a vision built in here. You can see that what is on the horizon now. He announced that 850,000 crore of investment will be made in the next 5 years. So if you average it out, he's basically heading towards 170,000 crores of investment every year, which means that the years to come, the kind of investment that you will see will be much more than we have seen in the past. So because he repeatedly mentioned the sector has remained seriously underinvested, it has affected its competitiveness, and they have not been able to make full leverage of their strengths. So in many ways, I think this budget is a departure from what has been in the past. He is, is ambitious, and he, about what puzzles me a little bit, that how is he going to sort of improve the operating performance from 92.4% to 88.5% in just one shot. He must be able to see where is he going to get more revenue. But of course, he was repeatedly saying that they'll make effort to contain their costs. So I think cost focus, operation excellence might give him that extra margin that he needs to shore up his earnings and margins.
Right. Ravi, let's expand on that, because one of the things that we had broken in the run-up to the railway budget was the fact that the railway minister would be increasingly looking at state partnerships in keeping with the whole state cooperation kind of theme of the government. We'll look at private and public partnerships, and we'll get private players for that last mile connectivity, which you are also concerned with. Pretty much everybody who's dealing with resources-rich industries or power plants is concerned with that. Do you think there is that kind of appetite to partner with the railways on things like this? Because on the ground, it's really hurting you.
Well, that he actually made two statements. If you would have noticed that he said the railways will make joint ventures with PSUs for the last mile connectivity, especially when it comes to the power plants and mines. And then, of course, he also talked about private sector participation. I think they haven't got any kind of commitment, but I know for certain that the Ministry of Railways and Ministry of Coal have already thought of a joint venture to provide the last mile connectivity between the trunk routes and up to the mines, because that is what was basically affecting the evacuation of coal from the mines into the rest of the hinterland.
Sure. All right, getting some important numbers here as well. Let me quickly, and Manish, this is what we were waiting for as well. Gross budgetary support for FY16, you're talking about 40,000 crores is what we're tracking right now. FY16 freight revenue seen at roughly around 1.21 lakh crore. Now remember, for this year or to 9 to 10 months, if we have the data already in, we've seen a good performance coming in. And somewhere, to what Mr. Uppal was also mentioning as to how you're going to get that operating ratio of around 88.5, I believe one of the important facts here, and Manish, probably you're more equipped to comment on this, is the way the fuel savings rate going to play out. Remember, oil price has seen a massive crack. That's probably something that the government has been really cheering over the last couple of months. That's probably one major aspect that is being put into consideration in achieving that 88.5% number. But, Manish, the latest numbers that we're talking, gross budgetary support at 40,000 crores, and you're talking of gross traffic receipt at 1.83 lakh, and freight revenue at 1.21. These seem to be pretty achievable.
Yeah, I think you're right. Fuel is potentially one of the areas where cost could see a huge saving. On freight side, I think again we'll need to look at it more closely. Freight has been growing at about 5 to 6%. So one will see, need to see if, how it kind of looks from the trend perspective. But if you think about it in linkage with GDP growth expectation, there could be a maths behind it that actually works.
Budgetary support, there were actually there were expectations that they would ask for about 50,000. So in that sense, it's a little below estimates. But the earlier, of course, budgetary support was closer to, of course, 30. So it's still going to be a bit of a stretch, for them to get those funds from the government. Just to get your perspective as well, Mr. Chandok, in terms of when we're talking about all these partnerships and the fact that they're hoping to tap into several of these sources, how do you see this playing out on the ground from someone who's actually seeing it, in action? How do you see the implementation of a lot that was talked about today?
You see, particularly, I think the last mile JV is possible because what happens, it really impacts the power plant, impacts the coal lifting. So last mile, definitely these companies which are impacted will definitely come forward because otherwise their cost is very high if they have to really take through the road. So I think there the private participation is possible, definitely. I think it's not that it's difficult. So far the operating ratio is concerned. I think with the freight, the fuel cost reduction and the operating efficiency and the carefulness by which they are really improving the operating efficiency, probably they will be able to achieve. There must have some math gone inside to write that number of 88.5%. So this year they are achieving what they had said last time.
Right. Priyanka, since you guys have been tracking the markets very closely, I want to, pop this question to you. In the run-up to the railway budget, it's the first time in many years that I've seen stocks underperform the way they did, And if you actually look at the stocks, none of them are climbing up substantially. In a sense, it seems as though, Manish, that a lot of the detailing is going to happen over a period of time, that there weren't many carrots, there weren't many specifics which the markets could kind of take away from this. And in some way, for the camp that said we want a vision statement, we want to see how after all, this is a ministry that had 5 ministers in the last 5 years. So a vision statement was important. Do you think he's parked everything over there?
I think so. And I think, he said it right in the beginning that this is one of the 3 documents that need to be seen together. And he's talking about a white paper and he's talking about a vision, a 2030 vision. And I think in some sense, if one takes a step back, railways do need a 5-year plan and a 10-year plan. I don't think you're going to see, sudden changes. Okay. So I think that part of it is valid. But I think just few things that I picked up. Goods trains can be timetabled. I think that has to remain a kind of important goal to, kind of reach out for. Work with states, and we talked about that a little bit before the speech also. And again, I think states want to participate with railways. I think it's a big mindset change for railways also, if you think about it. They are a great execution organization. They've not been a great partnering organization so far. And I think several things that he's saying is talking about the railways having to partner. So I think those will be, things to watch out for. From a current year perspective and from a trend over the
One specific question to Mr. Chandak, of course, electrification, a huge increase in electrification by 1,330%. It impacts KEC because you're a big player over there. So you should be very happy. Also, the fact that there is a lot of upgradation in railway tracks and extensions out there. So really, from a company standpoint, a lot of takeaways for you?
Absolutely very good for KEC, so far KEC is concerned, because we are exactly in these things. We are in railway electrification. We have been doing that from the time the India started electrification. So we've been doing that for last 30, 40 years.
So I think one correction over there is a freight rate hike for urea by and across the board actually by about so rate for iron, it actually varies, and those are the flashes. I think the devil was in the detail and the fine print.
The base class, the base class has been hiked by about 100 basis points. So coal is going to be the most highly impacted. That's about 2.7%. Cement is the 6.3%, if I'm correct. We'll just get those out. But coal is definitely the one that's going to be impacted the most. And we've got iron and steel at 0.8 as well. So across the board, there is a freight rate hike, that's been paced out as such. So your first reaction to that, Mr. Chandak?
No, I think as earlier, I think Ravi had said that it's very difficult to absorb any increase in the freight rate. So that as it is, they are highest in the world.
Right.
So I think they have really, it's very difficult for the industry really to absorb those rates.
Let's
But
actually
it does
get
take
Mr.
away
Uppal on that.
I know, Ravi, it does take away the concerns on how he's going to get those operating ratios going, because definitely he's going to get some of that from these freight rate hikes, because 67% of the revenue comes from them.
Yeah. Mr. Uppal, if we
Ravi?
could, yeah.
Well, you know, he seems to be giving the shocks and stages, and he did not mention any of these, you know, sort of rises during his speech. But I think this is coming in the fine print. But I feel that he should really sort of avoid any hike for the movement of the bulk commodities. What they should do actually is to cast a bigger net in the market and get into segments which they have not been carrying so far, like the perishable goods, the milk, the fertilizer and the food grades. They could definitely go for much higher penetration. You know that one thing that he mentioned as a part of his 5-year vision, that he's going to go from 1,000 million tons to 1.5 billion ton. This essentially means that he's going to hike up the volume that he gets from the freight segment by 10%. And that's a segment which brings him money. That's a profitable part. Or the passenger segment, they're still struggling to come to break-even level. So I think that could be one source where he's going to get it. And you just mentioned, I've not had the access to see what freight rates he has increased, but whatever he has increased, obviously is going to increase the top line and the bottom line. And one thing more is that he mentioned between the lines that they are going to buy power through auction. So, you know, normally they used to get it from the government companies, and the average rate at which they source power was quite high. So Mr. Prabhu, you know, very efficiently mentioned that they will be sourcing now onwards power through a public auction process. This means this could also lead to reduction in the total, their bill for the power. So I think he is going into some of the operational savings, and that's how he's going to sort of improve his bottom line.
Sure. In fact, let's try and get Parvesh's reaction to this as well. Parvesh, clearly, I mean, the freight rate hike is there. It's across, you know, you got to click into certain classifications. It's not a blanket move that we're seeing there, because if you look at the way the stocks have been reacting, it's still pretty limited. So there are probably classifications in terms of the way transport of some of these commodities would play out. We'll try and get those classification and details for you as well in a minute or so. But Parvesh, clearly, in terms of, you know, how you're going to achieve that 18.5% operating ratio itself, your thoughts, your reaction on this freight rate hike and the road forward?
I think 3 quick points, 2 as the answer to your question. First, I think the oil prices are probably going to play a kind of big role in reducing the ratio. That's clear.
Okay.
There's some freight hike which they're done. I think that's going to play up. That's going to do that. But I'll bring one other issue, I think, which kind of personally I was expecting that is going to be on the floor, but it's not, which is the PPP part. I just saw a number flashing on your screen saying about 5,800 crore, which I think last year the target itself was 8,000, though they probably did less than 1/10 of that. If you look at any sector in the infrastructure, look at road sector, look at aviation sector, and look at telecom sector, just these 3, they're not really progress. Even look at power, they're not really progress in the PPP. Private sector was seriously brought into the picture. Now, if out of 1 lakh crore plus the total contribution of PPP is going to be less than 5%, I think I'm very worried. I'm very, very worried on that one count, that one single count.
Right. Right. Of course, this freight rate hike is significant because it will have a cascading impact, Manish, across. From the initial numbers that we see, is it going to make a substantial difference in, because, you know, the other issue that freight is facing is a growing move towards road. And without the existing upgradation, and he's also spoken about 4 freight corridors, dedicated freight corridors being ready this year. I mean, what is the status report that you have?
Yeah, so I think, I mean, you're right, it will impact, but I think from what I'm seeing, it will probably impact Government of India more than end consumers, because, you know, it is urea and food grain and so on, so it goes back and hits the subsidy bill in a sense. The freight corridor is a little surprising, and again one will need to look at the details, because it's really the Delhi-Mumbai and the Delhi-Kolkata on which, you know, there is progress in terms of actual you know, projects getting awarded. So again, one will need to look at what is the what is he kind of detailing on that. But I think just on the point of PPPs, I have a little different view that I don't think he's necessarily looking at PPP as a large financing mechanism, and quite rightly so. I think very clearly he's saying the long-term financing has to come from the World Banks and ADBs and JICAs and from long-term debt instruments, which will need to have an underlying mechanism for servicing them. He's looking at PPP for last mile connectivity, for station redevelopment, which are, as well as maybe private freight terminals, which are smaller projects. Many of them are direct end user funded, so the user actually sees benefit in investing in the project. And I think that is a lot more practical. What will be interesting is the 4 BOT annuity projects that he talked about, and if he can get that going, that can lay the ground for a much larger PPP play, in future projects where financing and efficiency get bundled together.
But some of this has already been on the anvil for a while, hasn't it?
Yeah.
So you're saying that this time around to perhaps a little bit more faith in this minister and his intent.
Yeah, no, I think that's important that, let's not, use PPP as a balancing figure. Right. The challenge is land monetization kind of projects, and station redevelopment is a lot of real estate type project. We've not seen railways be successful in that so far. So I would like to see this year more as seeing some success than large amount of money being expected but not then eventually turning up.
You were also earlier talking about the RTA, and you were hoping to hear something on that. No mention of that, at least from what we've heard in the speech.
Yes, and I expect that will probably come in the white paper or maybe in the longer term vision, because clearly for any of this to be sustainable, separation of pricing and commercial principles in pricing, and the 14th Finance Commission has kind of also emphasized that it will need to be on the agenda. If it's not in the budget, it will have to come kind of off budget.
Well, in the midst of all of this, you've got the markets, the day is low. Take a look at that. Clearly, some bit of disappointment now coming in, but can't really correlate there because you also have expiry that's underway. So you've got almost a 1% cut. Sub 8700 now is what we're seeing on the benchmark index. Sensex now down by almost 1%, and you are trading at the day's lowest point. Clearly, there's a fair bit of weakness now across the space that we're seeing. Just a handful of stocks in positive, and the max gainer that you're seeing is only up by nearly 1%. So that's the kind of feel, or that's the kind of probably a little bit of a response coming in from that rail budget speech as well. And you've got some update coming in from the Supreme Court regarding the spectrum auctions as well. But staying with the rail budget itself, Mr. Chandak, since the debate is regarding PPP itself, as somebody who operates in the space, as somebody who operates rather deals with the rail sector itself, your thoughts on it and the opportunities that you probably could see, if at all, any from what Suresh Prabhu actually had to say?
See, the challenge in PPP is the uncertainty in execution.
Right.
And the permissions and approvals required. If really they can work out, they form a SPV earlier, they get all the approvals, and then the auction the SPV. Probably that model will be much more successful. But that happens that at least a lot of uncertainty is out. Your interest cost will reduce, your execution cycle will get reduced. Right. But that the government will have to work somewhat so that they get all the approvals, route alignment, then it will be much faster. So I think that's one option they have.
Right. Mr. Chandak, but going into this budget, one of the big ticket ideas that we were all discussing was true decentralization, where railways becomes a holding piece with subsidiaries, with 3 clear verticals of passenger, freight and suburban perhaps, etc. All of that has not happened. Do you think that's in the cards? And on the ground, have you seen any kind of discernible change in the way they are functioning? Because that's been the big demand, right, from industry.
Yeah, but just not possible, because what happens that the freight is subsidizing the passenger.
So it's all
the moment you have 3 separate companies, then who is going to really subsidize the passenger?
Okay, Ravi, let me get you in here. As always in the run-up to the budget, we have big, grandiose vision or big-ticket ideas that everybody hopes that the minister will come up with. At the end of the day, it's a balancing act, we all know. But given what he has done this time, and we will, of course, see the fine print later, does it give you any cues of what is going to happen with the budget on 28? Because that's the thing everybody talks about, right? If this is populist, then look out for that. I mean, what is the initial sense that you're getting?
Well, that the federal budget, we have a lot of stakeholders to please. I think, it will be very much on the similar lines, that there will be a lot of statements of intentions, because that's what railway budget is. It has initially left you very excited because it's addressing many areas which were always neglected or ignored. So, it sounds like a music to the ears, but it has also left many questions, in its trail, that how is it they're going to manage this kind of budget. I think one of the things that government really needs to focus on, rather than announcing more and more new schemes, that they should, ensure implementation of what they have already launched, so that it can build a kind of credibility. I think, if you listen to the railway minister's speech today, he went on for more than an hour to discuss about many micro schemes, small and large schemes of how they will improve qualitatively the railway's performance. But that requires huge amount of project management skills and the organization. Let's not forget that railway still continues to function as a department of the government. It is not corporatized, and unless you corporatize the railway, you can't even expect much of investment from outside. You might get a bilateral funding like the way you're getting from Japanese and the British and others. But for private sector to come and invest money in railway will remain a big question mark. So I'm really sort of concerned. I think the government they're simply not interested to talk about the reorganization of railways and position this as a purely commercial activity, or at least farm out several companies out of it while keeping the core with it.
Right.
There was not a mention of anything about a restructuring of railways.
Absolutely. Parvesh, let me bring you in here, and just taking from what Mr. Uppal has just said, we didn't really, we haven't really seen too much interest when it comes to some of these PPP projects. We've been discussing that ahead of the speech as well. We haven't seen too much interest when it comes to FDI, no mention of it in the speech at all. When it actually comes down to it, how do you see the potential for private sector participation going forward? Where do you see the funding coming from?
See, I'm still quite hopeful. First of all, I don't think PPP is just for funding. Right. I would consider PPP for efficiency, for innovation, for cost saving, for project management execution, where they can do very well, etc., etc. So I think private sector funding, private sector participation, rather than private sector funding, I think is extremely, extremely important. I did hear something he's saying that track and below will remain a national asset. He did say about rolling stock and about the stuff above the track. He also spoke about stations where the private participation is going to happen. He spoke about joint venture with states where private sector is going to be there. He spoke about the last mile connectivity where private sector is going to be there. We've been hearing the road ministry talk about last mile connectivity to the ports also being done, coupled with the inland waterways. So I'm still hopeful that private sector involvement will be far higher than some 5,000 odd crores which is being shown here. And I'm coming not from a funding perspective, because for funding he said going to put a separate cell in the ministry which will raise fund, long-term pension fund and PF funds will be accessed. There seems to be a common refrain of this government in particular. Multi-lat funding, yes, that's loan eventually, that need to be repaid. That doesn't become your property. At the same time, we talk about 20% increase in the length of the tracks in the 5 years, and a lot of other micro schemes which are all going to need money. So I think we need to read the fine print a little bit more to understand how the numbers stack up. But at an intent level, I agree with you. I think till the time an organization is actually corporatized, difficult to attract private sector. Like Ravi said, other mode can be like you can work the way this UMPB bids were there, where you form an SPV, get all the approvals, all the permissions, and then invite the private sector. So that's a possibility which is still there, but I don't see it happening in this budget, no.